So we are close to a situation where people recognize that there is no way that the US government can come even close to balancing its books. And that is a fundamental reason why people will lose faith in the US dollar, which is what actually Mrs. describes as a crack-up boom, or as we call it as hyperinflation.
Hello and welcome to the VRIC Media channel, where our mission is to educate you on how to make money in the commodities sector. I'm your host, Ted Butler, and today I'm very glad to be interviewing Shanmuganathan, also known as Shan, who is a proponent of Austrian economics, a former writer for Casey Research, and more recently the author of a book titled RIP US Dollar 1971 to 202X. In today's episode, Shan's theory about the death of the US dollar will be the main focus. However, we'll also be learning about his first-hand perspective on the Indian economy, as well as Bitcoin towards the end, which could get quite philosophical. Shan, thanks for coming on today. It's great to have you on the show.
Thanks, Dave. I look forward to the show today.
Yeah, for sure. I mean, I want to get straight into this, Shan, and ask you about the preface to your book, as I think it's particularly important for the US viewers. You write, "We're at the precipice of a collapse in the purchasing power of the US dollar, perhaps even leading to a situation similar to the hyperinflation in the German papier mark from the period 1919 to 1923. From here, you then go on to remind readers just how corrosive this hyperinflation can be, drawing on the example of a loaf of bread, which I think you have down as rising from 160 marks at the end of 1922 to a staggering 200 billion marks by the late 1923. I know you're not saying that this is going to be a certain repeat of the Weimar Republic in the US, imminently, but you did foresee a possibility where the Dixie loses 50% or even 90% of its value in the coming years. So first, I think it would be great if you could outline to our US viewers and everyone else why you think the dollar is going to die from hyperinflation, and then later we'll come to the how of the roadmap.
Right. So, before we get into it, it is important to recognize that at this particular point in time, the US is sitting on three asset bubbles. Okay, we have got a bubble in stocks, at least the Magnificent Seven, and we have a huge bubble in bonds, and we have a bubble in housing. It is a collapse of these asset bubbles and the subsequent monetary inflation that will be unleashed by the US Fed as a response to these bubbles breaking. That is going to lead to the hyperinflation. Now, this is going to be very similar to the 2008 with some differences. Now, if you look at 2008, even at that particular point in time, the Dixie actually crashed by 50% between 2008 to 2010 and subsequently recovered. But this time around, there's going to be no recovery in sight. For one, at that particular point in time, if you look at the CRB index, it was at an all-time high relatively. And at this particular point in time, it is at an all-time low. So the monetary inflation that is going to be unleashed by the Fed, it is going to lead into huge price inflation in the form of commodity prices going up. I would not be surprised if the US has double-digit inflation where the first digit is not 1. Now, all of us recognize that the Fed doesn't, or the US government rather, doesn't accurately report the inflation numbers, but even in the distorted form that the US government actually reports, it's going to be a double-digit inflation number in the US. So what happens as in when the US Fed is forced to hike the interest rates as a way to manage this price inflation? So we are going to get into a situation where we have an inflationary depression in the US for an extended period of time. That is the thesis of the book. And if you look at the national debt of the US, that has exploded after the 2008 bubble. We are going to have a much greater increase, in the national debt going forward, and we could easily have at least $5 trillion plus increase in the national debt. This is the total amount of the US federal government revenues itself at this particular point in time. So we are close to a situation where people recognize that there is no way that the US government can come even close to balancing its books, and that is a fundamental reason why people will lose faith in the US dollar, which is what actually Mrs. describes as a crack-up boom, or as we call it as hyperinflation.
Yeah, no, and that's a really important point. I think the why we've talked about quite frequently on this channel, but I'm really curious to know the how. I mean, we all know the US dollar is ultimately headed for continued debasement. Whether it dies before other currencies or whether it's the least dirty sheet that survives, who knows?
Real quick break here, guys. If you are a mining investor, you are without question familiar with the Golden Triangle region in British Columbia. This is one of the most prolific mining regions in the world due to its vast deposits of gold, silver, and copper. Now, for the last 4 years, Dolly Varden Silver has been busy expanding their high-grade silver deposit in the Triangle, and they are backed by some of the smartest investors in the silver business, including the legendary Eric Sprott, Hecla Mining, U.S. Global Investors, Fidelity, Delbrook Capital, Sprott Resource Corp, and more. If you are curious why the smartest money in the silver business is cozying up to Dolly Varden Silver, then hit the link beneath this video.
But in terms of the how, on the one hand, at the moment, we've got the Fed cutting rates to try and combat this hard landing recession, which we're either in or we're not, depending on who you talk to. And then in China, we've got President Xi being really aggressive with economic stimulus, obviously taking a little pause this week, but I think he's chomping at the bit to unleash even more stimulus after the US election. I actually think both of these headwinds converging at the same time could result in a rapid increase in the money supply, which could bring about the hyperinflation that you talk about in your book. But you have an entire chapter titled The Road Ahead for the US Economy. So instead of me speculating, perhaps you could draw from your part about the cycles of monetary inflation to explain how and maybe when you think the US dollar's demise will happen.
Right. So if you look at the cycle of monetary inflation, as I've explained in the book, we have, and this cycle has repeated 3 times since 1971, okay, which is when the US went off the gold standard. The first time it actually led to the NASDAQ bubble, wherein we had a cycle of easing starting the 1990s up till the up till 1995. Okay, at that time the Fed got the interest rates down to 3%, and though it subsequently hiked the rates, okay, we had the formation of the bubble because of the easing that happened. And the next round of monetary easing happened after the NASDAQ bubble, where the Fed got the interest rates down to 1%, and it held it at 1% for about a couple of years, right? And then subsequently the bust happened. If a few years of a 1% interest rate, okay, could lead to the 2008 housing bubble, we can only imagine what 15 years of 0% interest rate and a huge increase in the balance sheet of the US Fed could actually lead to. And that's why I said we have a huge asset bubbles at this particular point in time. Even if you look at the housing bubble, the housing prices today are substantially higher than what it was in the 2008 bubble. From the peak of the 2008 bubble to up till 2022, which was the peak of the bubble today, housing prices grew at approximately 10%. That's an unprecedented rate. Okay, this is peak to peak I'm talking about. So we have a huge asset bubble in housing. On top of it, we have a bond bubble that is unprecedented. We have never seen 0% interest rates like in the history of the US, and to keep it at 15%. So we have unprecedented bond bubble. So as and when these bubbles burst, okay, we are going to have a severe recession or a depression in the US. Now, even at this particular point in time, if you look at it, the national debt is growing at about 2.5 to 3 trillion, each and every year. And this is supposedly during times of good growth, supposedly during times of extremely low unemployment numbers. So if the debt is growing at 2.5 trillion during good times, how much will it grow during bad times? Okay. And this is even assuming that revenues stay flat, which it is very unlikely to. Okay, so you're going to have a situation where the revenues are going to decrease, and you're going to have a huge fiscal stimulus. Okay, this is going to actually cause the national debt to grow up by at least $4 to $5 trillion for the next several years, in my opinion. Right now, there is no way the US government can pay it off. At this point, it's about 35 trillion. We could easily have a situation where we are at 50 trillion within a couple of years' time, right? Even assuming a 5% interest rate on this 50 trillion, okay, we are talking about 2.5 trillion on just interest payments. Okay, so this would be 50% of the federal revenues of the US government. So this is a classical definition of a Ponzi scheme, okay, wherein the US government has to borrow money just to pay the interest cost. Right. So when exactly is the US dollar going to break? That's a hard question to answer. But I would suspect, okay, that the bubble, as soon as it bursts, okay, within about 12 to 18 months' time, okay, we should have the situation where it's very obvious to almost all, the federal government can never pay back all of the debt they have borrowed. And this is just the actual accounted for debt. We have a huge unfunded liabilities, as they call it as. I actually call it as unaccounted liabilities in the book. And that's upwards of $200 trillion. Okay, so there is no way the US government can actually meet its obligations. And this is going to lead to a huge printing in the US. Printing, and that is going to be the cost of the hyperinflation. Okay, so the hyperinflation is going to be caused by the response of the US federal government, Fed, as a response to the bubbles bursting and the subsequent monetary inflation that it unleashes.
Yeah, and one of the things I wanted to ask, perhaps is kind of less relevant in terms of the direction of travel. Do you think it matters whether Kamala Harris or Donald Trump gets elected? Do you think that this trajectory is already being embarked upon and is irreversible no matter who gets it?
I don't think it particularly matters at this point in time, because if you look at what Trump actually said in his first time and got elected, he said he's going to reduce the budget, and he's going to shift all of the debt to long term. Actually, nothing of it he was able to accomplish. In fact, the debt actually grew the highest in his particular term. I think for a one-term president, he has the highest record of increasing the national debt. I don't think a repeat. I think if he gets elected, it's going to be a repeat as I see it as. And almost 90% of the US budget is cast in stone. There is not so much of this, so-called discretionary expenses in terms of what they can do, right? And so it's going to be very, very hard for the US government to reduce its expenses. So I don't think it really makes a difference between Trump and Harris. And personally, I would prefer Harris simply because whosoever is going to be the president, they are going to get the blame for the hyperinflation. I would rather liberals get the blame for hyperinflation rather than the conservatives. Trump is actually a fake conservative. He talks a lot of conservative stuff, but in terms of his actions, there is actually very little difference with the liberal as far as I see it as.
Yeah, so I guess it doesn't really make that much of a difference anyway, in the grand scheme of things, who gets elected, but either candidate's going to spend, and that would obviously create a hyperinflation. What about the Fed? What do you think Jerome Powell and the FOMC guys can do? What do you think they should do actually from here on in? Because obviously, cutting rates risks the return of inflation in a bad way, and raising rates edges us closer to an even more severe recession than some economists are already saying we're actually in. If you do a bit of digging on the actual data, these jobs numbers actually aren't as impressive as they seem.
Right. So if you look at what the US Fed has been doing, the job has been to set interest rates for a long time now. Right. But should the US Fed really be doing that? It's like allowing the US government to set the price of your cars or houses or any of the other commodities. But the interest rate ought to be determined by the confluence of savings and borrowings. Savings are the people who actually save the money, and then there is demand from the borrowers. And this interest rate, it is a market equilibrium mechanism, wherein the quantity saved equals a quantity that is demanded for by the borrowers. And the market would do it automatically, simply the way it does for houses and cars and tomatoes. Now, when you have a government coming and setting interest rates, they set it at a level which is much lower than what the market would set it at. And that is because the government is usually the biggest borrower, right? So when you set a level of interest rates that is lower than the market natural rate, then the amount of savings is lower than what it would be, and the amount of borrowings is higher than what it would be. And that's what we see, right? You have a huge difference between the amount that is saved and the amount that is actually demanded for borrowings from the market. And that's what the Fed has to monetize. And this causes an increase in the balance sheet. That's what we have been seeing happening for the last several years. So in an ideal world, the Fed should not be setting interest rates at all. But given what's been doing and where we are today, ideally they should increase the rates. They should not have stopped at 5%. They should have taken to 6, 7, 8%, and that would have forced the US government to reduce its expenses. Now, despite the increase from 0 to 5% between 2022, the US government never decreased its actual expenses. And the national debt grew even at a faster rate, even when the Fed was actually hiking the rates. Okay, this shows that the 5% rate was not effective at all, like in actually managing what it was supposed to do. If you look at what Paul Volcker did, he took the rates up to 20%, and that forced the US government to cut back on its expenses. So that is the job of the federal government, right? They're supposed to ensure that the government lives within its means. But here, ironically, you had a situation where the Fed was hiking rates, and the government was actually spending even more money. All that it indicates is that the rate of hike was not sufficient enough. So he should have taken it up to 5, 6, 7, 8, 9%. Okay, till the federal government started cutting back on the expenses. Okay, that's what he should have done. Okay, but now that he has started cutting, I think he is going to continue cutting, and that is going to actually balloon the deficits, if you ask me. And at this particular point in time, if you ask me, it's just way too late in the cycle. I think the bubble is going to actually burst, whether it hikes or it decreases. And I think he'll try to protect his job and actually cut the rates even further going forward. And that is going to be a disaster.
Yeah. This is the thing. You make a really good point about how high interest rates should be a deterrent for the government's increasing more debt. You know, they should take that as an instruction. Okay, we shouldn't incur any more debt here, but they don't. And I actually cynically don't think they would, even if interest rates were raised to like 10%. I still think that the US government is so addicted to debt that it would continue to rack it up. I mean, just to give an idea, so I think we're about 1 trillion of debt every 100 days, in my understanding. Just give us an idea of how quickly you think that could escalate. I'm not sure if you have any figures from the book, but could you perhaps extrapolate that out to maybe a couple of years' time, what sort of debt you think the US government will be incurring each year?
Right. It's any kind of extrapolation of this type, okay, would have to be a linear extrapolation type. And that's unlikely to be the case in practice. Now, if you look at 2008, even people who actually foresaw the actual crisis happening, had they forecasted how much the US government would actually raise the debt by, even the most pessimistic number wouldn't have come close to estimating what the US government actually did, right? I mean, nobody could have forecasted the huge amount of increase that happened, right? I think it's going to be very similar to that. I could put a number 5 trillion, which would be a very logical estimate. Okay, but I think what is going to happen is going to be substantially higher than 5 trillion. And there's no very logical way to estimate how much they're going to add to the debt on an annual basis by. But at the barest minimum, I think it's going to be 5 trillion.
Yeah. Yeah, I'm just trying to get a handle on the kind of severity, but I guess it really doesn't make that much of a difference. It's still going to be probably a story of hyperinflation unless the Fed increases rates, which would then unleash more pain potentially on the US economy. But it's all very gloomy talking about the US economy right now and the situation that the Fed is in, because it is stuck between a rock and a hard place. One of the things you talk about in the book is the solution, you know, as opposed to, it is a pessimistic topic, but you do optimistically look towards the solutions. And I think you say that the final solution, as far as the US is concerned, has to be a gold-backed US dollar with a dramatically downside US government. And as much as I agree with you, Shan, I don't believe that this would happen anytime soon. Instead, the idea of a BRICs gold-backed currency is one that I see as more of a real possibility, especially as Russia just reportedly announced further gold purchases along with silver, platinum, and palladium too, which is a really interesting development that we'll come to later. I say all of this to say, are you observing any tangible evidence that would suggest this gold-backed BRIC currency idea is actually a reality, or do you think it's still more something theoretical?
I think China and Russia has been working on this particular concept at least for a decade. Okay. Now, if you look at the gold holdings of PBOC, which is the Central Bank of China, okay, that is officially reported at something like 3,000 tons, and that's a gross underestimate. Officially, by the requirements of BAS, it is only the central bank gold holdings that have to be reported. But in the case of China, I believe most of the gold is actually held by the 2 other agencies that are part of the Chinese government, but are not part of PBOC.
Right.
and their holdings are upwards of 30,000 tons by some estimates. So they have been working on it for a really, really long time. And if you look at China, that's the single largest gold producer in the world today. And this has been the case for the last 20 years. And they produce something like 400 tons out of 3,500 tons. But not a single ounce ever leaves the country. They don't export. Despite being the largest producer, they're also the largest importer, I'm told.
Yeah.
So if you just add up these numbers, it is the Chinese government that's been buying all of the gold that's been going into China. And the estimate is something like 30,000 tons. Now, they could easily launch a BRICS gold-backed currency with this amount of gold. And I think that's what will happen. And BRICS for all practical purposes happens to be China. If you remove China out of the equation, there is no BRICS. Okay. So it is China and Russia that is pushing forward with the BRICS gold-backed currency, and that will happen. The easiest way to ensure it happens is to sell oil for the BRICS gold currency. So like instead of selling oil for either for US dollars or for euros, all that the OPEC countries have to do is to sell it for BRICS.
Right.
That's a fairly easy transition to make, and that is the way I think BRICS is going to come into the world stage. It is not going to be formally actually anointed as the world's reserve currency. OPEC countries will start selling, and slowly it is going to replace. This is actually very similar to what the US dollar did. All the US dollar actually became the official currency like in 1940 or thereabouts after the Bretton Woods conference. But if you look at the holdings of all the countries, the US dollar was the single largest reserve asset even by I think even as early as 1920, like it was a single largest currency that was held outside. So I think it's something very similar is going to happen, wherein a lot of central banks start storing the BRICs instead of the US dollar as a reserve asset.
That's interesting. I mean, how do you think? Oh, go on.
I think that is the way this transition is going to get affected. It's not that some world body is going to come forward and say that, okay, we have removed the US dollar and it's the BRICS that's going to be the reserve asset. That's not the way it's going to happen. I think OPEC will start selling oil for BRICs, and a lot of central banks going forward will start actually having the BRICS currency as the reserve asset instead of the US dollar. And over maybe 5-10 year period, I think the world will automatically recognize that, okay, that the US dollar does not deserve to be the reserve currency.
Yeah, so it will almost happen organically, naturally, without being enforced. One of the things that I'm considering at the moment is how this would practically work, like to have a gold-backed currency. Would there be some kind of digital copy? How would this work? And also beyond that as well, I think it's important as an advocate of the bimetallic standard to have some kind of representation of silver or other commodities. And we're seeing that in Russia now. Do you think that's a trend that we're going to see continuing as well? The sort of stockpiling of non-gold precious metals like silver, platinum, and palladium?
I think more often than not, we have always had a bimetallic standard in place, and gold was used for the really large transactions, and silver was used for the smaller transactions.
Right.
And I think it happened at a ratio of something like 15:1,
right,
okay, between gold and silver. I think markets would automatically move towards that particular standard, if you ask me. Okay, wherein gold is used for the really large transactions. Okay, but for day-to-day purposes, people use silver. Okay, that is going to happen. I forgot the first part of the question that you asked.
I think it was with regard to. So you answered.
Okay, now see, I don't think we are going back to the classical gold standard at this particular point in time. Okay, after Bretton Woods, we had something called as a gold exchange standard. Wherein a gold to dollar convertibility was possible only at the level of central banks. And that is the way we are going to start with. The ideal way is to go back to the classical gold standard, but I don't think that's going to happen immediately. Okay, but this gold exchange standard wherein central banks can exchange the BRICs currency for gold, that is a standard that will be like implemented first.
Interesting. Yeah, no, very interesting. Okay, so we've talked about the successor, and how the BRIC could be involved in that. I want to stay with this BRICS thread and tap into your knowledge about the Indian economy, because that's where you're based, given that you live there and you've written quite a lot of articles for Doug Casey on this topic. Quite recently, I think India overtook my country, the UK, to become the 5th largest economy in the world in terms of GDP, which puts it behind only 4 countries, as we know: Japan, Germany, China, and the US. So beyond that as well, Goldman Sachs predicted that India will become the world's 2nd largest economy by 2075. And the FT's Martin Wolf, I saw, suggest that by 2050, India's purchasing power will be 30% larger than that of the US. So right off the bat, my question to you is, do you think that India is on its way to becoming the leading global superpower?
I'm not as optimistic about India as these foreign agencies are. Okay. Having said that, I need to comment about the size of the Indian economy. You should also remember that we are about 1.4 billion strong.
Yeah.
As compared to what, about 150 million for UK?
Yeah.
So I don't think the size of the economy itself is very relevant. I think what is relevant is the per capita GDP. And there we are, I think India is ranked 140th or something like that in the world. So, I mean, we are a poor country as far as the standards of living of the people are concerned. Right? Now, we need to improve this dramatically. As a country, I see no country that has greater potential than actually what India has. Okay, we have a extremely good savings rate, extremely well-educated population. Okay, but if you look at our governments, okay, they have, I mean, perpetually committed all the sins that the US government has been doing, which is run bloated deficits, extremely low like interest rates compared to what it ought to be. Right now, it's okay for a rich country to commit these sins. Okay, but when a poor country commits this sin, okay, then the effects are very telling. Having said that, it's possible for India to balance its budget. It's actually far more easier for the Indian government to balance its budget as compared to the US government. So there is a possibility that they can change their ways and then go back. We had one extremely good year in the year 1991, okay, wherein we changed direction. But after that, it's been one long downhill stride. If we can revert course and go back to doing all the changes that we started in 1991, then there's no reason why like India can't do at least half of what China is doing today. And that would be a good start to aim for. To say that we are going to be the 2nd largest economy, I frankly don't think it's going to transpire.
That's very diplomatic of you, I guess. One of the things that I did actually write about when I was doing the silver chapter was this huge solar park. I don't know if you've actually seen it in India, 5 times bigger than Paris. Your boots on the ground in India, how big of a push towards renewable energies like solar and wind even in India is happening? I mean, obviously, we're going to get to coal in a second, but do you have any kind of thoughts on how...
I've not studied this issue in detail for me to comment about. But let me make this one particular point. In India, all of the electricity is still controlled by the governments. So all of the distribution and the transmission happens through the state electricity boards. Right. So even if you have a power plant, you have to necessarily sell it back to the government at a very low rate. And that's the reason why it's not taken off at all. So unless the state gets out of the way, I don't see solar going in a huge way in India. Of course, we have about 12 hours of sunshine for about at least 8 to 10 months in a year. So like in some sense, we should be ideally pushing to harvest the solar electricity in a big way. Okay, but we have not, simply because of the state interference, and that I don't see changing anytime soon.
Interesting. Yeah, so perhaps that could mean a sustained dependence on coal, which would, of course, hit a record production in 2023 of 1 billion tons in India alone. You actually mentioned to me that you have some investments with exposure to coal, also uranium, oil, silver, and gold. So as we are a mining and commodities focused channel, it'd be great if you could summarize your rationale behind these investments, starting with coal. Why not?
I could start with gold and then maybe just explain on to that. So if you look at the book, I explain how the commodity prices at this particular point in time are at an all-time low. It's even lower compared to 1971 when you adjust for all of the monetary inflation that's happened, right? So if in 1971, if you look at it, gold prices went from 35 to 80, 800 odd. That's upwards of 20 times. Okay, silver grew up 25 times. Oil went up 20 times. Okay, so the cycle of monetary inflation that's going to happen now, it's going to be even higher as compared to what happened in the 1970s. Okay, although in the book I have stated that gold prices can easily go up by 10%, can easily go up 10 times. I also make it clear that it's a floor, not a ceiling to gold prices.
Right.
Gold prices can go up much higher than the number that I have put in the book. And that's a very, very probable scenario if you ask me. And gold is a barometer of all commodities, right? So all commodities are going up, are going to go up, and in particular those in the space of food and energy. And that's what people should invest their money in. People should find the basic producers of these commodities. And if you invest in these companies, you can make the investment of your lifetime over the next 5-10 years.
Okay, so absolutely, no, I would absolutely agree with that. But with regard to the sort of energy commodities, the coal, uranium, oil, what are your thoughts on that at the moment?
I am particularly bullish on coal because we are going to have a return to coal in a big way.
Right. Return to coal.
Yeah. I think that is going to, and that's going to return in a big way, despite all of the interference from the environmentalists. A lot of countries, including Germany, have actually shut down their nuclear plants. Right. And it's not easy to restart these plants. It's far, far easier to put up a coal plant than a nuclear plant. So I think the price of coal could easily, double, triple over the next few years. Right? Wow. And if you look at uranium, that has the maximum potential to go up. If you look at all other commodities, oil, coal, the cost of fuel as a percentage of the total cost is high. Okay, but if you look at uranium, the cost of uranium could actually go up 10 times, 20 times, 30 times, and it still will not make any difference to the output price if you actually produce it through a plant. And that's because the capital cost is so high, and the raw material cost as a percentage of the capital cost is so low. So I think that is one commodity that has the potential for delivering the maximum returns, but then it is a very hot commodity. Right, so you should be very, very careful when you invest in the uranium juniors, and you have to go to the very, very safe jurisdiction when you actually invest with the uranium juniors.
Correct. Yeah, absolutely. Would agree with those thoughts. One commodity that's not been as hot has been silver until recently. We're now kind of just hovering around $31, and this is a really exciting time. We just did a video with Peter Kraut and David Morgan yesterday, talking about how we're on the cusp of this moment for silver. It feels like we've been in this position before, but it is truly uncharted territory over the last 10 years. What are your thoughts on silver going forward? And do you think it could outperform gold for this year, even more so?
Right. If you look at the price of silver, it was actually $50 in 1980. I can't think of any other commodity which, after 30 odd years, is at a price that is 40% lower than what it was in 1980. And it's a most widely used metal if you think about it. I think more patents have been filed for silver than for all other metals combined. Okay. And the use of silver for industrial purpose, it's growing absolutely manifold. And I've heard that the latest solar cells actually use 2 times the amount of silver that the previous panels used to use. So I think the amount of silver that is going to be used for industrial purposes alone is going to grow absolutely manifold. And even if a fraction of the money that flows into gold actually gets into silver, then silver prices could just go through the roof. Right. So I think that's one very, very safe commodity apart from food to invest in, if you ask me. And even as far as the use in jewelry is concerned, a lot of shops have started using silver simply because gold prices have gone up. And if gold prices actually doubles or triple, then very few people can actually afford to buy gold jewelry in countries like India. If you look at India, almost about 50% of the gold that is purchased for the use of jewelry, it is being done by people with an annual income of less than $5,000. So they can't afford to buy gold jewelry, and they'll start shifting towards silver jewelry. So you could have a huge explosion there as well.
Yes. So, right. And I think that's often overlooked when we look at the silver market. We're so focused on these industrial and the monetary factors, but that jewelry side is actually a huge aspect that could drive out performance in the silver price. And you're saying you're observing that shift potentially happening already, where some of your friends perhaps are choosing silver over gold?
It started already. I can think of at least 3 or 4 big brand names in India that have started manufacturing silver jewelry, and this was unheard of 3 years back. Okay, but at this particular point in time, you have a lot of shops that have started selling silver jewelry simply because price of gold has gone up. People may not realize this, okay, but the price of gold has gone up about 65% in the last about 2 years in dollar terms, and about 85% like in terms of the Indian rupee, right? So that's a huge jump to accommodate in a 2-year time frame.
For sure.
Right? And this increase is actually going to hasten faster, if you ask me, and that is going to lead to the substitution of gold with silver for jewelry.
Very interesting. Yeah, that was something I was curious about and suspecting as well. So that's great to hear. Okay, Shan, I think we're going to finish on Bitcoin. We've talked about gold. Now we're going to talk about the digital gold, as many people call it. For me, there's a compelling case for speculating in Bitcoin, and I've been vocal about that. I do own some myself, but I do have this concern about adding too much due to the influence of BlackRock and other financial institutions. In my view, these companies could be pigeonholing Bitcoin as an investment and veering away from the payment system vision, which was outlined by Satoshi Nakamoto in the original Bitcoin white paper. So first of all, I'd be interested to hear what you have to say about that point, but then also anything from your recent article about where you explore the parameters of the 21 million supply limit.
Right. So Bitcoin got actually positioned as some kind of digital gold, right? Proponents of Bitcoin were trying to market as if it's new age gold, as if it's going to be a replacement for gold. Now, you have to look at history and actually understand why gold became money in the first place. Right. It was not an accident. It was not a choice made by the governments or the kings. It was a choice that was made in the free markets. And gold was not the first choice as money. The first choice as money was actually rice and wheat. And this was around 4,500 BC. Okay, so why did people actually standardize on these commodities as money, right? So we were on a barter system. Okay, but barter system had huge disadvantages. So people started using a medium of exchange, and the article that was used as this medium of exchange had to be a very highly desirable product. Okay, you don't want to be the patsy holding on to something that's absolutely useless. So what came to be accepted as money was a commodity that was very highly desired and that would be used by almost each and every person in the society. And hence the first form of this money was wheat. And from wheat, we actually shifted to iron and copper. Okay, so why did we shift from wheat to iron and copper? Simply because these were almost as desirable as wheat. Okay, but these are far more durable and far more convenient to store, right? So for the reasons of durability and for convenience, we shifted from rice and wheat to iron and copper. And from iron and copper, we shifted to gold and silver for the very same reasons, right? Because you could store a huge amount of value like in a small space in the form of gold. It was extremely durable. You could drop a brick of gold at the bottom of an ocean floor, and after 100 years, it would still retain all of its properties. Right? So you had a product that was very highly durable. So 5 properties were needed to see if these commodities could serve the purpose of money. And those 5 properties were desirable, durable, divisible, convenient, and consistent. Now, gold and silver fitted all these 5 perfectly. Right? Now, if you look at Bitcoin, why is it desirable? What can you do with Bitcoin that you can't do with anything else? Right? There's nothing that you could do with Bitcoin today. So it does not meet the basic test of desirability itself. Now, even if you assume that you could use it for cross-border transfer of money, etc., etc. Now, how are you sure that it will serve the same purpose 10 years down the line, 20 years down the line? You could have a far superior algorithm to Bitcoin than what you have today. Okay, so Bitcoin actually doesn't fit the durability test as well, right? So it is not desirable. Even if you could come up with some utility, I don't think it's going to be durable, right? So Bitcoin doesn't fit the property of money at all. People are mistaken with all the terms like mining and then having a gold symbol and a dollar, etc., etc. I don't think Bitcoin has any value. Of course, it has a price in the market today. Okay, but this price I think it's going to go down substantially, at least relative to gold, if not in absolute terms.
Yeah, like you mentioned in the article, I think Bitcoin is a topic that is divisive. Even people within the libertarian economist sphere completely disagree. I'm somewhere towards you, but still somewhere more in the middle as well. I do think there is a case for Bitcoin, and I think
I've not seen any official surveys. Okay, but from my experience, by interacting with people like you, I find greater supporters rather than opponents of Bitcoin within the libertarian community. Of course, time will tell who is right and who is wrong, and we'll see.
Yeah, and this is the beauty of it. I think within the libertarian sphere, we can entertain points of view and hear each other out. Other spheres may not be so welcoming of different points of view. But I think one thing I wanted to ask you about Bitcoin before we finish is this sort of 21 million supply. We led to believe that it's limited. In the engineering, I guess it is. But what do you actually believe? Do you believe that's true, and do you believe it could potentially become more than 21 million, or is that a fallacy?
No, it can't become greater than that because that is algorithm, right?
Correct.
But if you look at cryptocurrencies, I think there are at least 8,000 cryptocurrencies today, and almost all of them can do what you can do with Bitcoin. Okay, so the supply limit, like I said, it is a fallacy in the sense that you've got a lot of other cryptocurrencies that can do exactly what Bitcoin is doing. Are you able to hear me? Okay, so the supply limit is a fallacy. Okay, but perhaps far more importantly, any commodity that has a utility, I think society benefits from a higher supply of those commodities. If you look at cars, aeroplanes, rice, oil, we would be better off having double the supply than what we have today, right? I would prefer to have 6 cars instead of 3 cars, right? I would like to consume more oil, etc. But if you look at Bitcoin, how is a society better off if we had double, triple, 10, or even 100 times the amount of Bitcoin that we have today? Nothing. Like, it makes absolutely no difference to the citizens, right? We can't use it for anything as compared to gold. If we had 100 times the amount of gold, okay, we'll be using for various purposes today. Okay, all of the utensils in the house, we could make it out of gold. Okay, because like it doesn't react at all and it's so much easier to maintain, right? So compared to the utility, okay, that can grow dramatically like in case of gold. In case of Bitcoin, even if you have a huge amount of supply, there's nothing that we can do with it. That shows a total lack of desirability of Bitcoin, and hence it doesn't fit the objective of being money in the first place.
Yeah. But for me, where Bitcoin should be charting a trajectory towards is back towards trying to be a means of exchange. But the problem is its price is so volatile that it doesn't have that store of value aspect at the same time. In that sense, it's not ready to be money yet. And it's still, people often forget it's still so young in the grand scheme of things. And this is why it's younger than me. This is why I always go back with what's worked in the past. And that's not to say the Bitcoin price may not go up. In fact, the investment demand from these institutions may well just absolutely skyrocket the Bitcoin price in the longer term. But at what point is the fundamental principle compromised? So that's the argument that I have. What if it's not actually delivering on the remit that it was supposed to be, in that utility of being money? Then what's value does it really have? And in that sense, it's prone to a potential sell-off.
Right.
So that's my view.
People talk about Bitcoin as being a store of value. I fail to understand what is the value that is actually being stored in a Bitcoin. Now, if you talk about gold, what is the value that gold is storing? It is its fundamental properties, right? Okay, like in terms of ductility, malleability, conductivity, etc. These are the properties, and because it is able to retain these properties over a long period of time, it is a store of value. It's a store of value of these properties. So when you talk about Bitcoin being a store of value, it's store of value of what? It's nothing. Bitcoin doesn't have any property that we desire. So there is nothing to be stored in a Bitcoin. It's a store of nothing. It's not a store of value by like any
I know there's going to be a few potentially triggered people in the comments, but this is what it's all for, is to promote discussion and opinion. I don't disagree with everything you say, and I think you've got a great point. But I would probably tend towards, I don't think it's completely useless. I think Bitcoin is still a work in progress. I don't think the curtain is closed just yet, in my view anyway. But certainly in agreement on the direction of the US dollar. I think people should definitely check out your book. I really enjoyed it, and I'm sure
so
more
just
people.
one more point on Bitcoin, Ted.
Okay, sure.
I mean, when we say like a diamond is not divisible, why are we saying that? I mean, we can divide a diamond, right? We can divide it into a billion atoms if we want to. But the point is, once we divide it, okay, like it ceases to be desirable, right? Okay, so the fundamental attribute that we are looking for in any object that is going to be considered as money has to be this desirability. So if you think there is some utility that you can come up for its algorithm, I'm sure we can have much better algorithms actually to do the same function 10 years down the line. After all, compounding power is just, going through the roof, right? So these algorithms are going to look trivial 10, 20 years down the line. Okay, so this fundamental property that we use Bitcoin today, even assuming that we can come up with something, that is not going to be durable going forward as well, right? As compared to gold. We can be certain that whatever we are using gold for today, we can use it for 100, 200, 500 years down the line. Okay, we can't say that about Bitcoin or these cryptocurrencies. We are going to far superior algorithms.
Sure. No, that's fair. That's a fair point. One thing I would say to that, I think relative to the other cryptos, Bitcoin is still better. I think it'll just like the US dollar is the least dirty sheet of all the currencies, Bitcoin is probably the least dirty sheet of all the cryptos. But that's not to say that there aren't risks. And I think sometimes people in the maxis kind of wholeheartedly just subscribe to, it's almost like a religion, and they don't see the other side. I'm trying to offer some kind of balanced perspective. I know you kind of have deep conviction against Bitcoin, but that's your rationale is fair. But yeah, I think it was great speaking to you, Shan. I think we're going to have to park it there. I think
I didn't have such a strong conviction. I bought Bitcoin when it was at a much lower price. I saw it when it was at $100. But yeah, I made up my mind back and yeah.
So you profited from it. Okay, fantastic.
No, I didn't.
Wonderful. Okay, Shan. Well, if there's anything you want to add, please do. But let us know where we can find you in the meantime, and where people can find your book.
It's there on Amazon, like in most countries, and then they're on LinkedIn. Or you could send a mail to me at Shan at +43, which is PLUS43 capital.com.
Perfect. Okay, Shan. Thanks for coming on. Happy to have you on again anytime soon.
Thanks, Ted.